makers and market movers. Live from Davos, Switzerland, for the World Economic Forum. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, live in Davos for the World Economic Forum annual meeting. Now, in a moment, we'll be speaking to the IndianOil chairman, Sahney. Also this hour, we'll hear from the Google DeepMind chief operating officer, Lila, Ibrahim, the governor of the Bank of Spain, José Luis Escriva, and Novo Nordisk executive vice president of commercial strategy and corporate affairs, Camilla, Sylvest. But first thing is first, I know everyone here in Davos and elsewhere, of course, talking about Donald Trump, tariffs, no tariffs, how big are tariffs? Well, for the moment, we're seeing quite a lot of relief across markets. European stock benchmark actually edging closer to a record high. I'm looking at U.S. equity futures. Look, they're also indicating that there's optimism over more artificial intelligence spending under Donald Trump. And that doesn't certainly, for the moment, it could change, but for the moment, it's offsetting uncertainties over looming tariffs. So you can see the stocks Europe 600 gaining some 0.6%. Now, President Donald Trump continues to loom large over WEF here in Davos as leaders digest a flurry of executive orders and announcements within his first 2 days of office. So let's bring you up to speed with the latest. Trump saying his threat to hit China with 10% tariffs on all imports is still on the table and could come as soon as next month. Well, he's also said he's actually open to Elon Musk or Oracle chairman Larry Ellison buying TikTok as part of a joint venture with the U.S. government. He's also unveiled a $100 billion joint venture with SoftBank, OpenAI, and Oracle to fund AI infrastructure. Well, Trump's policies will have far-reaching consequences across the globe. Well, joining us now is Maneka Doshi, Bloomberg's senior India editor. Also, India's oil minister has said the country is likely to increase its purchase of U.S. oil and gas after President Trump announced plans to unleash domestic energy production. So we're very pleased to also welcome Sahney, the chairman of IndianOil, India's largest refiner. Chairman, thank you for joining us. Look, there's a lot going on. Maneka's on top of this. Every country trying to understand what Trump tariffs mean. But you have to deal with the previous administration and also these extra sanctions on Russian oil, which makes it more difficult for you to find oil to refine. How's it going?
It's okay. Like when the war didn't start, before Ukraine, we were buying almost less than 2% of oil from Russia. Right. It was a minuscule portion of our total crude oil supply. Now it had reached up to 30% or so. Overall, India, I'm talking of, not only my company, India. So now we are in a different situation that we were getting 30% of oil from Russia. But again, these sanctions have come up, and these sanctions, as per our estimates, are going to have an effect on around 1.5 to 1.8 to 2 million barrels per day. The total impact of these sanctions will be. And this much oil will be around, again, 25 to 30% of whatever we are processing in the whole year. It is around 5.5 million barrels per day, to be exact. So we have enough sources. We have enough collaborations. We have enough geopolitical and commercial alliances going forward. Maybe it's Gulf, maybe it's OPEC, maybe it's OPEC plus.
Mr. Sahney, yeah, and what impact that will have on the price at which you source much of this crude, because you will have to go back to the Saudis, to be able to get more crude from them.
We have never broken our ties with anybody. We have not. We have always honored our term contracts, which were there with my Gulf partners, with my OPEC partners, and with my OPEC plus partners. Whichever term contracts were there, we were honoring them all the way. Whatever has shifted to Russian was the spot market only.
So how will that rebalance?
Now we will rebalance because spot market.
Could you give us the proportion of what you might now need to, raise from other parts of the world?
This much is 1.5 to 1.8 million barrels per day is easily available in OPEC, in OPEC plus. They are already giving indications of unwinding that is going on, that is going to be there moving further. And then US has again come into the market with again increased energy availability from the US. And as you rightly mentioned, that Indian government has also indicated that we are open to buying more energy. Maybe it is gas or it is oil from the US sources. Then Guyana is there, then Brazil is there, then there are different new players are coming up. And then enough of it, in my source, we are very much, our risk is taken care by diversifying.
I mean, the energy policy from the U.S. can completely change, right? And this is more oil, more pumping, more everything.
Yes.
How much does this complicate your life if the price of oil goes down significantly?
No. I'll be very happy. Because we are importing more than 85% of my crude basket is imported. So in that scenario, I have to be very happy. I have to feel very happy if it goes down. Although some of the companies which are into exploration, which are into production of oil, they might feel they might feel bad. But overall, the Indian economy will be very happy at a price which is lower than 75 or near to 75.
But do you expect them to go down? Because we are hearing commentary on supply getting tighter at this point in time. And so at least in the near term.
In my real assessment, we don't expect these to go beyond 80, 82, 83, whichever they have already gone.
Right.
In my assessment, in our assessment as a company or as Indian industry as a whole, we expect them to come below 80 and be range bound between 75 to 80.
Indian companies are in the midst of negotiating their contracts, longer-term contracts with Middle Eastern suppliers.
Yes.
Is that the price at which you're able to source?
No, I can't disclose that, and I can't discuss that on Bloomberg.
Give us a broad idea. You can amongst friends.
But we expect it to be between 75 to 80 range. That will be the range, and we'll be expecting it to be on the lower side of the range.
Are you expecting a lot of volatility when it comes to the price of oil, to trying to understand what will happen in the next 12 months?
I don't think so. This volatility has happened. Whatever has happened has already happened. Now it is a time for stabilization. Now it is a time for making the industry to allow it to grow properly and it to be stable, and prices have to be stabilized. And if some geopolitical incident happens and if there is a spike, we are robust enough, the Indian industry or Indian economy is robust enough to take care of those kind of vagaries.
Could you briefly talk to us about that volatility Francine was speaking of, the impact it has on your expansion plans? And also India is slowing down. So what do you make of fuel demand in the country? And again, the impact that will have on your expansion plans?
My expansion plans are already on the way, especially when I talk of my company. My expansion plans of adding around 20% of my capacity is already on the way. So
by when?
By 2027.
All right.
So I will be increasing wherever I stand today. I'll be 20% more than that. So they are already...
But could you increase that if things go to better than expected?
We can always push them. We can always try to sweat them more. My capacities, we can always go to 110% or 115%. That can be done. But as of now, to meet the demand, we are targeting that whatever Indian demand will be there for gasoline and for diesel beyond 2030 and onwards. For that, we are preparing ourselves and we are making our capacities ready for that.
Mr. Sahney, in the closer term, right now, are you seeing a dip in fuel demand in the country? That sort of, in some ways, validates that slowdown story?
Gasoline, it's not stopping. Gasoline growth is not stopping. Gasoline growth is there around 6% to 7%. It is already growing, even up to 8% also. Yeah, diesel demand is somewhat subdued, but still growth is there at around 1%, 1.5%, which used to be 4 to 5%. Now it is 1 to 1.5%, but still it is a temporary phase. It can improve, and it is not a very long-term arrangement. It is going to be a very small thing, and we have a very strong, when GDP is growing, when industry is growing, when 6.5% growth is predicted by IMF, and last 1 decade it has been a 7% cumulative CAGR. I don't think diesel growth can stop in any way.
Chairman, thank you so much for your time. A very robust conversation there on the future for oil and refining. Sahney there, the chairman of Indian Oil and Bloomberg's senior India editor, Menaka Doshi. Now, coming up, as President Donald Trump unveils an AI joint venture and scraps Biden's order regulating the technology, we take a look at what's next for the future of AI with Google DeepMind's chief operating officer. That's next, and this is Bloomberg. Welcome back, everyone. Now, President Donald Trump has unveiled a joint venture to fund artificial intelligence infrastructure aimed at speeding up development of the emerging technology. This comes as he rescinds former President Biden's sweeping executive order on regulating AI. Now, joining us now for more on the AI landscape is Lila Ibrahim, the Chief Operating Officer at Google DeepMind. Lila, as always, thank you so much for joining us. You're really and have always been a leader in this. With the Trump administration incoming, does it change what you think about the potential or the ceiling for AI is?
I've always been very optimistic about AI, and I think those of us in the field are. I think there's a lot of changes coming for sure with the announcement of a variety of executive orders. But as with any administration change, we're happy to work with the incoming administration and just need the time to work through all the changes that are coming.
Now, you have quite a lot of exciting things at DeepMind. Has anything surprised you about the rollout of Gemini 2.0 so far?
Oh, yeah. 2024 was an exciting year for us. Midway through the year, we introduced a research platform called Project Astra, which started to introduce agentic features and agents of how can we make AI more useful as a universal AI assistant for people in an everyday life. We advanced that in the December timeframe with a flurry of product announcements, including Gemini 2.0, our most powerful AI model to date, being multimodal from the ground up. And that also is a step further towards agentic features.
So is there a feature actually in Gemini 2.0 that people like more than others? Is it something that you could explain to us, and also how that impacts your thinking for the next time round?
Yeah, well, maybe what I can do is tell you, I just mentioned agentic features, just to tell you a little bit more. Multimodal really means the ability, as humans, we speak, we look at pictures, we hear, and that's what we mean also with multimodal. So the fact that Gemini 2.0 is a continued iteration of providing that type of seamless interaction with AI while still being more grounded in factuality and bringing some of those new features. Now, what we would like to get to is, right now I can do a search and say, okay, I want to plan a trip, or I'm at the point right now in my year where I'm trying to think through summer holidays, how I'm going to keep my kids busy. Agentic features would allow an AI to take action for you, but with your approval. So we now have that in the hands of some of our trusted testers to help us think through the guardrails so that we can build this technology, making it useful while being responsible in how we deploy it.
So is that, for the next iteration of Gemini, is that what you lean into?
Yeah, that's in order to make AI more useful, we need to bring in more things like how do we think about an AI having more memory so that it can be useful and know the types of things that you like, or how do we bring in reasoning and concepts and taking actions in a responsible way. So you're going to see more of those types of features come throughout the year.
So this is like a personal assistant that could actually not only help you with research, but execute for you.
Yes, with your approval, correct.
How far away are we from actually almost everyone having one of these?
I think a lot of this will depend on how the testing goes with different stakeholders and how we think about ensuring that it's responsible and useful. I think different people have different tolerances, so you're already seeing some people build tools to help AI be more valuable in an assistive way every day. But our goal for AI from the very beginning when DeepMind was founded in 2010 was to how do we build AI responsibly to benefit humanity. Big part of that is generative AI, but also in our work around AI for science.
So, Lila, if you think of the next 2 years, right, 2-3 years, which could be a big rollout of some of this technology, how should we think about some of the pitfalls, right, some of the regulation or the safeguards that we as users should be thinking about and you as builders are putting in place?
I think one of the important things that we've already seen is it's not always accurate. We know this as builders, and I think having people understand that, so we still have the human in the loop to ensure that you're doing your own fact checking, et cetera. We're also thinking about things like local context. What this means in one country will be very different. The humor is different, the cultural aspects. So how do we work with local ecosystems, local governments, academics to make sure that the technology is relevant within the local context? I think that's an area of continued focus. This is generally, we think about if we can find ways to demonstrate the world impact, it's also an important part of how we build trust with society. AI is not slowing down, so we need to think about how do we build this in a more collaborative way.
Yes, is the main roadblock going to be trust from the consumers?
I think trust from the consumers is an important part, as well as how do we ensure that this technology is regulated, but in a right-sized way that allows us to have both the opportunity while mitigating some of the risks.
Lila, when you go around the Congress Center and actually listen to conversations, a lot of the focus this year is on AI. Will it lead to job losses, or is it just a matter of trying to retrain, and whose job is that?
Yeah, actually, a lot of the conversations I'm having with governments as well and universities are about how do we think about the future of jobs and what skills are important in the future. And I think, in my 30 years in tech, I've seen a lot of evolution in the types of jobs that people have. So I think what's important is how do we think about reskilling and upskilling. I'm really encouraging everyone, start experimenting now with AI. It's so important to get familiar with it so that you can become literate. Much like we introduced digital literacy skills in the early 2000s, so that people would have more opportunities with that skill set.
Do you think the new administration in the U.S. is thinking about that?
Yeah, I think governments around the world are thinking about this because they're, and we're partnering not only within Google and Google DeepMind, but also the tech community at large of how do we, AI is a technology that is global in nature, and so we have to think about how we work across the world in bringing this so that it is beneficial to folks.
Lila, thank you so much, as always, for giving us a little bit of your busy schedule. Lila Ibrahim there, the Chief Operating Officer at Google DeepMind. Now, coming up, we'll bring you more from the World Economic Forum here in Davos, including a panel on the path for global interest rates moderated by Jumana Versace. That's coming up shortly, and this is Bloomberg. Welcome back, everyone. Let's head over to a discussion here in Davos on the prospects for interest rates in 2025, hosted by Jumana Versace.
As you know, when you look at long-term interest rates, you can have two explanations. You can have monetary policy expectations. So the succession of short-term interest rates forwarded. And then you have the term premium. What increased in the last 4 months is a term premium. And this reflects increased uncertainty. It's about inflation fears. It's about too lax fiscal policy, starting with the US, and it's about global uncertainty. To say it with other words, and I will conclude with that, but this is a very important point on the direction of interest rate. There is a risk that the benefits of disinflation and monetary easing is weighted or lost by increased uncertainty, economic fragmentation, and a too lax fiscal policy. Or to say it in other words, an economic policy, in order to be efficient, including for growth, must be consistent. And this is a very important lesson for both sides of the Atlantic.
Really interesting. Thank you. Ron, I want to ask you from the perspective of, you have oversight of what investors are doing and how the flows have evolved over the last couple of months. What have you seen in fixed income, quite simply? And is there anything that would explain this backup in yields that we were talking about, specifically in the US, by the way?
Yeah, no, Jumana, it's a good question. In fact, I would say that it's quite consistent with what Francois just said. So just given our role, we service institutional investors and we manage money, and about 15% of the world's assets passes through, financial assets passes through our doors. And when you look at those flows, running up to the election, it was fairly stable. There was not a lot of change. There's been a long-term, meaning the last couple, 3 years, overweight to U.S. equities from around the world. Right after the election, there was yet another bump up in inflows into U.S. equities, interestingly coming from U.S. investors. Non-U.S. investors stayed at what was a high level, but didn't add to that, didn't take away from that. But what else happened was even more interesting. Outflows from emerging markets. I think this uncertainty, and I think Francois is using the right word, is uncertainty. Uncertainty around what the election of Donald Trump meant for emerging markets. And fairly significant outflows from long-dated debt. Again, uncertainty around what to expect on that, and in my mind, actually contributing to this term premium increase. The other thing that we observed is that cash levels still remain at very, very high levels amongst real investors. They're off from the peak, but still very, very high. And it's hard to say what that means. It could be more uncertainty. Let me keep some money on the sidelines and decide what to do. On the other hand, the more optimistic way to think about this is there's a lot of money waiting to be deployed.
Nikolai, have you changed your, let's stick with short-term interest rates for now. I'll get to long-term. But have you changed your view on what the Fed may do this year?
No, so I don't spend, well, first of all, I generally don't have a view on interest rates. I'm just trying to look at where is the risk. And I focus not so much on the short term, I focus on the long term. And to me, the biggest risk we are seeing now is the US long end. That we could see a proper backup on the back of the things you talked about, you know, less labor supply, tariffs and so on, with high budget deficits, very high debt levels. And I just fear that there is a moment where investors suddenly decide we want to be paid much more to lend money to governments.
Yeah.
And I think that's the biggest risk to financial assets.
So I was going to say that because
that was Jumana Brzezinski in Davos moderating a panel on the trajectory for global interest rates this year. You can continue listening to that panel and more on the terminal at Live Go. Coming up, our interview with the S&B president on interest rates here in Switzerland. This is Bloomberg. Well, good morning, everyone, and welcome to our special coverage live from Davos from the World Economic Forum annual meeting. I'm Francine Lacqua. Now, we've heard this week from BlackRock's vice chair, Philip Hildebrand, who says it's not clear how far the Swiss National Bank will need to lean on rate cuts here in Switzerland. A short time ago, the S&B president, Martin Schlegel, also spoke to Jonathan Ferro, who asked him about the rationale for a 50 basis point cut last month.
So in December, we cut the interest rate from 1% to 0.5%. And the reason is that inflation prints were lower in the months before. And also inflationary pressure in Switzerland was considerably lower. So we had to do this big cut in December.
What's the source of the disinflation?
It's several factors. One is energy prices, but also food prices. But then also in the medium term, it's also less second-round effects that we see. This means that the inflation forecast is also lower.
What is it about that makes you uncomfortable about your projections going forward from here?
I wouldn't say we are uncomfortable. If you look at inflation, it's now 0.6, so it's well inside the range. Also, inflation forecast is over the whole horizon, is in the range. But nevertheless, we have easing inflationary pressure, and this means that we have to be with the timely monetary policy, we have to adjust rates and monetary conditions to achieve price stability.
You say you're not uncomfortable, but we're getting uncomfortably close to 0%. We're very close now, the Swiss National Bank. How do you think about that as we get closer to zero and think about the prospect of perhaps going back to negative interest rates?
So at the moment, here at 0.6, this is well inside the range. We have a range from 0 to 2%, and also the inflation forecast is inside the range. But of course, we cannot exclude negative interest rates. We never exclude any measure, actually. And it's also clear that nobody in Switzerland likes negative interest rates. Also, the Swiss National Bank doesn't like negative interest rates. But if we have to do it, we will do it.
You've said before nobody likes it, but they work. When you say they work, what do you mean by that?
We had 7 years with negative interest rates, and in this time we always said we need these negative interest rates in order to make the Swiss franc less attractive, and this really worked. So with higher interest rates, it was pretty clear that the Swiss franc would be under even more appreciation pressure.
Is that something you have to think about more going into 2025 with the incoming administration, the worries about geopolitical risks rising and the potential that once again your currency becomes a haven? Is that something you're considering a little bit more in 2025?
The Swiss franc is traditionally a safe haven, so we are used to this. But of course, like for Switzerland is a small open economy, so open markets are very, very important. So it's like the geopolitical risks and also like the trade conflicts are not beneficial for Switzerland.
When I look at dollar Swiss, the Swiss franc is weaker against the much stronger dollar. When I look at euro Swiss, the Swiss franc is stronger. On a trade-weighted basis over the last 6 months, it's been quite stable. How are you and the team considering the FX channel at the moment? Is the Swiss franc too strong, too weak, just right? How are you thinking about things?
So we look at monetary conditions overall. This is on the one side the interest rates, and on the other hand it's the exchange rate. And these monetary conditions have to be right for the economy economy. And at the moment, they are right, they're appropriate.
Just to explore a hypothetical, just to understand your reaction function a little bit more, you said that all options are on the table potentially when it comes to things like negative interest rates. Currency intervention was a big part of your predecessor's toolbox. Is that something that's on the table for you?
So we always said, and we'll always, we said in December that we are ready to intervene in the FX market if necessary.
Are US sensitivities to that important to you?
I mean, for the Swiss National Bank, we have the one tool is the interest rates and the other tool is the exchange rate. And there these FX interventions have worked in the past, and we are, if necessary, willing to use them again.
Just to understand that a little bit more and to follow up, the Trump administration before has called the Swiss currency manipulators. I want to understand whether that's a consideration for you at all, or whether that's something you'd be willing to ignore just to make sure that you hit your own objectives.
So our mandate is price stability in Switzerland, and for this we use the interest rate and the exchange rate. So it's that this is our mandate, and we'll follow our mandate.
And if that comes from criticism, with criticism from abroad, that's not something that influences you?
Our guideline is our mandate, and this is enshrined in the law. This is what we look at the Swiss National Bank.
You've been at the Swiss National Bank for quite a while. I believe it is the 10-year anniversary of removing the Euro-Swiss floor. I remember that day very well. You do too. You were in the trading floor. Can we just reminisce about that a little bit? What was that morning like? Because that was a big shock. I wasn't in New York then. I was in the City of London. And I remember how big the move was in foreign exchange. What was that like for you?
Oh, this was certainly a day that I will remember all my life. It was a very stressful day, obviously, because we had to prepare this removal of the minimum exchange rate. And over the years, we really built something like a fortress to protect this minimum exchange rate. And then we had to remove this fortress overnight without anybody really seeing it. And I think we look at the data quite carefully and think we were successful in removing it without anyone noticing it.
Can I ask you a final question? Because we all noticed once it was removed. Can I ask you this final question? Negative interest rates potentially on the table. Currency intervention is something that you say you could explore in the future if you need to. What about another cap, another Euro-Swiss floor? What was the lesson from that experience? Is that something that you would take off the table?
This is not something that we discuss at the moment at the Swiss National Bank.
Is it part of the toolbox?
I never exclude anything, but this is really not something that we discuss at the moment.
That was the Swiss National Bank President Martin Schlegel. Coming up, the ECB expected to reach its 2% inflation goal by the middle of the year, allowing for lower interest rates. We'll speak to the governor of the Bank of Spain next. This is Bloomberg.
We have to engage in a constructive approach in our relationship with the new administration. I do believe that Europe and the United States, we share a strong transatlantic bond rooted in common values, history, culture, and of course common interests. So, you know, at the end of the day, a trade war is not in the interest of the US and of course in the interest of the European Union. So let's focus on how do we strengthen this transatlantic relationship and avoid any kind of misunderstanding.
That was the Spanish Prime Minister Pedro Sanchez speaking to me earlier. Now, ECB officials are set to cut interest rates next week, with inflation on track to reach the 2% in the coming months. Well, joining us now is José Luis Escriva, the governor of the Bank of Spain. Governor, thank you so much for joining us. I think this is our first interview together because you joined the Banco de España 4 months ago. So congratulations on the job. I mean, it's going to be quite volatile and difficult. You have, of course, an ECB meeting next week. Is an interest rate cut a done deal?
Well, we have to. The meeting itself is relevant. The discussions in the Council will be actually very relevant, and we spent actually 2 days there discussing a wide variety of issues, indicators, inputs provided by the staff. So it's I would not pre-commit to a decision, but certainly I would say the market expect a further cut of 25%. Seems to me that this is the most likely scenario, but I don't see any reason at the same time to. My personal view is that's fine. I mean, to continue with our gradual approach to normalization of monetary conditions in the euro area.
Governor, how do you see the stickiness of inflation? What do you worry about that you're not able in this last mile to get down? And this is even before possible tariffs from Donald Trump.
Yes, I think this is primarily confined to service inflation. And it's true, and it's we are making research on that. The expectation is that service inflation that we at present is hovering around 4% should decline over the next 6 months around 3%. I mean, there are good reasons to believe that this is going to be the case because wage pressure are diminishing and forward-looking indicators of wages are pointing in that direction. But of course, we need to wait until this expectation, this forecast is materializing.
Yeah. When are you expecting that to materialize? Again,
I would say that over the course of this year, actually already 2025, and the incoming data will be relevant. I mean, when we say that we are data dependent, I mean, this is in our communication, this is really so. I mean, in a situation of uncertainty, with some issues to be clarified, we need to wait for hard data to confirm our forecast.
Yes, it's not that easy because it's hard data, but you also have to look at expectations to make sure that you don't go too hard or one way or the other.
Precisely, right. But I would say that in a situation of particularly high uncertainty, hard data, incoming information, meeting after meeting, proves to be more important.
Because it doesn't behave the way that you think it should? I mean, for example, what does it take for Europeans to start consuming properly?
No, let me tell you something. At the same time, there is high uncertainty. The reality is that even if you look from June up to now, but more specifically, since the last meeting of the Council, basically the information we are gathering is confirming our central scenario. So there is a lot of uncertainty, two-sided, but at the same time, the incoming information is confirming the central scenario, which is one of gradual converging of inflation to 2% and of a recovery, which is not particularly impressive, but a slow recovery of the EU economy as a whole. It's true that there are some downside risks to growth, and this particularly stems from weak domestic demand, not only consumption, but I would say more problematically investment.
But Governor, I mean, internationally, we don't really know what happens between the U.S. and China, and Europe could be at the forefront, right, of these pressures.
Yes, I mean that's one of the sources of heightened uncertainty, stemming from geopolitical risk, but also from, let's say, what the U.S. administration is going to ultimately do in a number of areas. I mean, we have made a lot of simulations internally about impacts, might be potentially very impactful. I would say that on growth, I mean, the policies that are announced are not particularly growth enhancing, not only for Europe or for the rest of the world, but even for the U.S., if we take a long-term perspective, doesn't look like. I mean, and at the same time, I mean, the policies can be potentially inflationary in the U.S. It's less clear whether there's going to be spillovers to the rest of the world, but this is something which requires careful monitoring over time.
But does it mean, Governor, that through your modeling, you're also able to say, for example, look, if there's 15, 20% tariffs on Europe, or if there's inflation going up by, let's say, 0.5% in the US, that means that our interest rates will have to do this. Is that possible at this point in time?
First, the most difficult thing to calibrate is even the impact of tariffs, because it depends very much on the reaction of third countries, which are very, very difficult to predict. So the first source of uncertainty stems from what the Trump administration ultimately is going to do. But then the reaction of the others, and the impact on the economy, the instruments that we have, since this is not something that happens so frequently, I would say are not sufficiently reliable. Or I would say that we have to operate, unfortunately, with a high uncertainty. Right. But this is what we do all the time, central bankers, to deal with uncertainty in a way or another.
But so does it also mean that the ECB is maybe a little bit more sensitive to what happens with the Fed and interest rates there, interest rate expectations?
I would say that to the extent that impacts us to different channels, the exchange rate channel is one of them. But of course, we need always to factor in all these elements within our framework. Yeah. I would say that uncertainty is high, no doubt. And that's the reason why our data-dependent optionality, full optionality, is to retain this full optionality is more important than ever at the present juncture.
Governor, thank you so much, as always. That is José Luis Escriva, Governor of the Bank of Spain, giving us a little bit of his busy schedule for his first interview, actually, on Bloomberg. Coming up, the U.S. targets Novo Nordisk's blockbuster diabetes and weight loss drugs for price cuts. So we discuss all of that next with the Danish drug maker's Executive Vice President of Commercial Strategy and Corporate Affairs. That's next, and this is Bloomberg. Well, the head of Novo Nordisk attended crisis talks with Denmark's prime minister amid rising tensions with the U.S. over Greenland. President Trump has threatened tariffs on Denmark if it doesn't give up the territory, and the U.S. is by far the biggest market for the pharmaceutical giant. Well, joining us now, Camilla Sylvest, Executive Vice President of Commercial Strategy and Corporate Affairs at Novo Nordisk. Thank you so much for joining us. Look, you go into the corridors of the Congress Center here at Davos for the World Economic Forum, and everyone's really trying to figure out what Trump 2.0 means. You're really in the firing line. Denmark is at the moment. What do you think will happen?
I think it's evident here at the World Economic Forum that a lot of things are going on. A lot of things are also changing. I think there are some things that are not changing, and that's for sure, the need for working with serious chronic diseases, making sure we can overcome those. We've had a lot of discussions about new tools, artificial intelligence, quantum computing that can help us actually address some of the health problems of the future. So those health problems, especially around serious chronic diseases, are evident and will continue to remain, and we are very happy to work with also policymakers around the world to find out how do we address that.
But when the President of the United States says, look, get me Greenland or I'll put very big tariffs on Denmark, how does Novo respond?
I think we're very focused on our commitment to drive change to defeat serious chronic diseases. So it's not for us to respond to something that is a discussion in a different space. Nevertheless, of course, we follow this with great interest, as we do with many of the things that goes on in the political landscape, also here in Davos. And of course, we notice also the need between a lot of parties that are working on health problems and climate problems, and of course also how we can together try to overcome some of those. So this particular collaboration between the private industry, between policymakers, is there, and it needs to continue, and we are quite happy to take part in that.
Novo Nordisk, of course, has had some incredible success because of the weight loss drugs. You have competitors, especially Lila, that is doing really quite well in the space. How does Novo try to avoid losing market share?
Yes, so our primary focus is innovation. I think that goes for some of our competitors also, which is a really, you can say, healthy approach to keep bringing better and better treatment to patients. And for more than 100 years, we've been quite focused on insulins, but we've now moved into a new space that will address serious chronic diseases in obesity, in diabetes, but also in cardiovascular health. And this is our primary focus. We are quite happy to see that some of the new tools that are being discussed here, also in Davos, like generative AI, can actually help us across our value chain to keep improving our efforts. So we are quite hopeful that we will continue to bring innovations to patients.
And continue gaining in market share? Or is that, again, you know, the next couple of years will be very crucial where you end up in 5 years?
It's a clear ambition of ours to be a leader in our space. And if we just think about the unmet need, that continues to increase. Today we know that we have close to 40 million children below the age of five that are living with serious overweight or obesity. And if we're just looking at children in general, it's close to 400 million below the age of 18. And we're getting close to 1 billion people living with obesity when we take everyone together. So this is really an alarming rate, because we know that this is a key driver of other serious chronic diseases like diabetes, like cardiovascular disease, like chronic kidney disease. So that's where our innovation comes in, hopefully, and it's a clear goal of ours to continue to drive that change.
A number of big drug makers, of course, are facing patent losses by the end of this decade. This is something that the industry has to grapple with. Do you think that will lead to more consolidation, more M&A in the industry?
I think for sure there will be companies that will be producing biosimilar versions of great brands. That's natural. It's part of sort of how the industry is organized, and we have a certain patent life, and after that there will be others. And that's why innovation keeps being very important to us, and we hope to keep bringing that to patients. It's a big task, and that's why you also see us continue to scale, both in production, in product supply, to bring those treatments to patients, but also in terms of number of people we employ in our company. But of course also in terms of how we keep driving our pipeline, also in terms of business development.
How much are you spending on innovation?
We're spending quite a lot, and quite a big part of our sales goes directly back into innovation, either organic innovation in research or in business development. And you see us making, you know, more and more collaborations, partnerships, deals also.
Do you worry that actually health in this period of uncertainty, geopolitically, tariff-wise, is getting less of a focus here in Davos?
I think it's quite important to keep focusing on the problems of the world and how we can contribute to solving those. And we also know we cannot do that alone, so we need to do that together. I've met, a lot of very engaged organizations at this meeting, engaged politicians, and also private companies that actually all are working on solving health crisis, environmental crisis, and of course also political issues. So we continue to play our role in that, but no one can do this on their own.
Camilla, Sylvest, thanks so much for joining us. That was the Executive Vice President of Commercial Strategy and Corporate Affairs at Novo Nordisk. Now, we have more great interviews coming up from Davos today, including Volodymyr Zelensky, the President of Ukraine. We'll also be speaking to Javier Milei, the President of Argentina, and Alexander Stubb, the President of Finland. Now, plenty more to come right here on The Pulse this week from Davos. Tomorrow on the show, we also speak with the French Minister for Foreign Trade, Laurent Saint-Martin, the NATO Secretary General Mark Rutte, European Investment Bank President Nadia Calvino, and Marsh McLennan President John Doyle. Up next, Bloomberg Brief, Danny Berger and Manus Krani in New York from Davos. This is Bloomberg.